Hi, I'm Christina Haganey, President of Valor Payroll Solutions, and we work with small businesses to help them with their payroll. So right now we are in the month of April, which means it is time to file those Q1 payroll tax returns. Now keep in mind when it comes to the payroll tax filings, different tax types can have different due dates. In addition, the same tax can have a different due date for the actual tax payment and the tax filing. So for example, your 941 federal tax deposits are due either semi-weekly or monthly, depending on your look-back period, whereas every employer is required to file that 941 form quarterly. So some businesses may have only 3 tax payments with their 941, others may have one for every single payroll that they process. In addition, depending on if you are a single state or a multi-state employer, you may have 1, 2, or an infinite number of returns to file. So when it comes to payroll taxes, you will have your 941, which is your federal tax return, and that is going to take care of filing the employee's federal tax withholding, plus the employee and employer Social Security and Medicare liabilities. Then you will have your unemployment tax return, and so that is going to be where you file as the employer to report the wages that your employees were paid, and then you as the employer will pay that tax due on those wages. Now, historically, the unemployment tax returns are usually only one payment and one due date, with that being the end of the month following the end of the quarter. So for Q1, for example, the quarter ended on March 31st. The unemployment tax returns and unemployment tax payments are normally due by April 30th. When it comes to withholding, each state determines their payment frequency depending on the amount that you withhold from employees. So if you're in several different states, you may have several different income tax withholding payment frequencies. Then there is normally some sort of return, although some states do allow the payment to be made in lieu of filing a return. So it's a mixed bag of fun here when it comes to your payroll taxes, is the point I'm trying to make. Now, if you are doing everything completely manually, I would suggest filing as much as you can online in those tax portals rather than doing paper forms and or mailing a check. It's much easier to keep track of what has been filed and what has been paid and to prove that that has been done versus mailing things in. If you are using a payroll service provider or a payroll software, I would say the general rule is trust but verify. So they may have the obligation to file and pay your payroll tax deposits and filings, but at the end of the day, you as the employer are ultimately liable for making sure that everything gets filed and paid on time. Even if your service provider has an issue or error, at the end of the day, you are going to be the one that's on the hook. So when you are in your payroll system, usually there's a place where you can go to see the filed returns. A lot of people use QuickBooks for payroll, and that can be a bit misleading in what they will or won't file and pay. So if you are using QuickBooks, and I'm just mentioning this because it is a widely used product, make sure you're checking your payroll overview section and paying attention to anything that it's telling you that you need to do. If you just recently set up payroll for the first time with a service provider or software, one step that often gets overlooked is making sure that you have those third-party administrator or TPA permissions set up. That is what will allow your service provider to file and pay the taxes on your behalf. So if during onboarding you were supposed to log in and grant access or fill out a form to give access, it's really important that you get that done as soon as possible in order for your service provider to be able to fulfill their obligation and file and pay those taxes for you. It's really beneficial to have logins to your tax accounts, all of them, even if you have a service provider and don't necessarily need to do any work in those accounts, because again, trust but verify. So it doesn't hurt to take a couple of minutes and log into each tax account to double check not only that the return was filed, but that there's no balance due on the account. Now, if you've been doing payroll for a while, you probably have everything squared away as far as access and permissions. But one thing that a lot of business owners forget to do each year is to update their unemployment tax rates. With the exception of, I think, New Jersey, I'm not sure if there's any others, most states will give you a new unemployment tax rate each year, which will take effect on 1/1. Now, different states have different processes for providing those notices to clients. Some are available in the portals, some get sent via regular mail. But if you have a login, you can usually find that information in your unemployment tax portal if you didn't receive anything in the mail. If you're a new business, normally you'll have the same tax rate for a few years, but once you have an experience rating, then you can expect to see that rate go up or down each year, depending on how much you've paid into unemployment and how many employees have filed benefit claims against your account. So if you have a lot of claims on your account, you will see that rate go up, sometimes significantly, and that rate can stay high for several years until those claims drop off. So just to recap here, with payroll tax filings, there are a lot of different tax types. You have your federal taxes, which is going to be done on the 941, and then you have state income tax for states that have income tax. You have unemployment tax, which is the employer's liability, the employer's expense to pay on behalf of the wages that they've paid their employees. And then you might have some additional tax types like local, municipal, earned income tax, county taxes, paid family medical leave. So the list can really be infinite when it comes to payroll taxes, depending on where you have employees and how many states you have employees in. If you're doing everything manually, opt for doing things online in portals whenever you can, rather than mailing returns or mailing checks. And if you have a payroll service provider or software that you're using, make sure that you trust but verify. Get your logins to your tax accounts, log in at some point to make sure that things have been filed and paid, and make sure you look out for any alerts in your system that might be telling you something is off or needs to be done in order for your service provider to be able to file and pay those taxes on your behalf. Because again, at the end of the day, you as the employer are ultimately liable for any and all payroll tax filings and payments, even if you're using a service provider. It's on you. So make sure you know what's been done, what might need to be done, and that you are paying attention in your online portal, in your online payroll platform if you have one. And don't disregard any notices that you may see, any pop-ups, any warnings, because those are usually important and should be taken the time to address. As always, if you have payroll questions, please don't hesitate to reach out. You can drop your comments below. I assure you we will respond to them, or you can find us online at valorpayrollsolutions.com.